So this is how we like to celebrate Tax Day, with a live Q&A on all the News Nation digital platforms, right? Hey, how's that for a good time? We know how to party around here. Along with Doug Flynn, who's a certified financial planner. He's a regular guest on our television show, News Nation Now, which just got off the air, by the way, to run back here to my office to do this. I'm Connell McShane. So we're on the TV from 3 to 6 p.m. Eastern time. And then, like we were saying there, you can join us. We're going to try to do these kind of financial Q&As maybe once a week or so, to get, because people liked it last time. We were talking, Doug, about all the I don't know how to phrase this, issues we've had in the market, but for regular people, saving 401ks and the like. And today, it's funny, we can peg it, and we'll started to get some questions coming in to get to some of them. And thank you for writing in. You can put it in the comments section, whether you watch on YouTube, Facebook, whatever it is, and we'll try to get to as many questions as possible. We're talking taxes. Well, shouldn't you know what you're doing with your taxes? April 15th is already here. But, there's things, and we talked about this on TV a little bit. Give us a couple quick tips before we start with questions about what people should be thinking about, even on the 15th of April.
Sure. Yeah, a lot of time it's already done, but if you filed an extension, that's a lot of people do. It doesn't have the stigma that it used to have. You can certainly just file an extension, you get that automatically, and that buys you some time for filing. And if you're self-employed, there's a lot of things you could do up until the extension date of October 15th. So that buys you more time to make some retirement contributions if you're self-employed, and some other things. But another great tip, that no matter what your situation is, once you know whether you get a refund or you owe, we talked about it today on the show, is most people haven't adjusted their tax withholding since they took their job. They filled out a W-4 form when they first got hired, and they never thought about it again. And then their situation changes. And so now you're getting a big refund, or you're owing a lot. And you can so easily fix that simply by downloading a new W-4 form, filling it out with whether you want more or less taken out, and handing it into your employer, and that'll adjust your next paycheck. And so this time next year, that can be adjusted. So you certainly, you don't want to owe, so they take a little bit more out each paycheck. Or even getting too much when you can now get 4% plus in a money market. Why don't you want that money in your paycheck every week and save it? And that's the benefit of getting that money in your check each week versus just a big lump sum at tax time.
Let's talk about that, just that basic concept for a second. So what some people will say is like, oh, I got a tax return for X amount. Oh man, look at me, I'm going to go buy something. And that happens sometimes. We used to talk about it in the news, that there'd be a pickup in spending if people get their tax returns. Talk about why that's not a good idea necessarily.
Well, what I would say is that if you're the kind of person that if you got that money in your paycheck every week, if you're going to just blow it every week, it is a forced savings.
So you're forced savings, right? Yeah. So that sometimes does make sense.
It does. You have to know yourself. But if you're the kind of person that just as easily as you get that extra, let's call it $100 a check in your check, and you could set up an automatic deduction for that same $100, the feel to your paycheck is the same. But now, instead of getting a refund at tax time, you're going to get that money throughout the year. It's going to be invested, and you have all of that plus interest. Think about this. The first paycheck you get in January of this year, you're going to withhold the whole year. If you don't file till next April or next October, you're not going to see that refund for anywhere from 16 months to almost 2 years. You could be earning interest on that money. But the key is you have to be putting it away. If you're not going to do that, you are actually better off just getting the refund with no interest.
Right. Yeah. Like I said, you got to know yourself. And some people, they might hear the logic from someone saying, well, you're better off getting another interest rate, investing it. And the person knows, you know what, if I have this money, I'm not doing that. I'm spending it on whatever. So yeah, that's a fair point. You have to kind of know who you are going in. Deductions. Let's talk about that for a few minutes. So another thing you get into is what can be deducted from your taxes. Some are obvious, but then there are some others, I know you've pointed out, that people miss, that people, may not realize are tax deductible items.
Yeah. So there's a couple different things. But most people end up taking the standard deduction, and that standard deduction for this current year is $30,000 for a married couple. So if you think about it, if you itemize, which is the other option, and you should always look, even if you've been taking the standard deduction for years, you should always have your account, or you should run it both ways to see if you qualify to itemize. As a single person, it's 15,000. So unless you have 15,000 individually or 30,000 as a couple of deductions, and that would be mortgage interest and taxes and all of those other items that would go into the itemized deduction category. If you're not going to get over that, you're going to end up taking the standard deduction. But
Okay.
if you do, then perhaps it does make sense to itemize. And some other things that come in there is if you had a very heavy medical expense year. So over certain percentages, you can look them up. Portion of that can be deductible. So there's these items that you can look up that fall into what can be deducted, and in the itemized deduction category, you can see the whole list. Of course, you want to tally them all up and see if that gets over the standard deduction. If it doesn't, you take the standard. 90% of the people take the standard, so it's a smaller percentage that itemize today. But
Okay.
you should look at it, because if you can, it could mean more of a tax break and more tax money back for you. So it's definitely worth looking into.
All right, let me shift gears for a second. And if anybody has tax related questions, then you could put in the chat that wherever you're watching this, we'll talk through some more tax related issues. But if you have broader questions, as people did when we did this last week about investing kind of in this climate, and if it's going to stay like this forever, and how crazy it is, and what types of changes you should be making, I want to give people time to do that as well. So that's what we were talking about right last week. And I don't want to say things have calmed down since then, but maybe they have a little bit. Doug. So how are you thinking about markets right now?
Yeah.
Plural, not just the stock market. But remember last week, I thought the president was freaked out by the bond market,
Yeah.
and that's why he kind of pulled back on the tariffs, because he was afraid that, and there were rumors that was like Japan, who knows, for sure who it was that might have been selling our debt, or just big hedge funds that had some issues. But the idea
Yes.
that people weren't confident in the United States. So we went up on the 10-year note, which is the benchmark for like our debt for our treasury, went up to like 4.5%, which is high compared to where we were. And now I know it's come off that a little bit. So are things calming down in the financial world a little bit? And how do you think that affects how people should view their investments in their retirement?
So recency bias, which is what we all have, is of late it's been very crazy in the last couple of weeks. And one tweet or one change to this can change everything immediately based on tomorrow morning. So it has calmed down, though, because they've noticed that the bond market he wants lower interest rates to be able to refinance the U.S. debt at a lower rate. You do not want to do that. It also impacts the 10-year, as you mentioned, impacts mortgage rates. Mortgage rates went back up. That hurts people's ability to buy, especially when things are very high. Things are calming down right now compared to where they were. Maybe they continue to do that as they land deals and tell us what they are with these countries. We can start knocking these down. It certainly will help, but anything can change tomorrow. And I'd almost would expect that it might get a little crazy again before it settles down more
It doesn't feel
officially.
over.
No, definitely not.
That's my genius analysis of the whole thing. It's like,
but I will say the volatility can be your friend, especially coming back to taxes. If you did a tax deductible IRA, as a matter of fact, that's another way to save money on taxes. You're investing that money right now. You just did, or you've got it in there and now you have to invest it, or whether it's a Roth, or even adding to your 401k throughout the year. Adding during the volatile times, it's a good thing. If this money is money that you don't need for years, you're taking advantage of that sort of sale that's going on Wall Street, with the whole idea that down the road, when you need the money way down the road, things are much higher.
All right. So questions on all this stuff. Again, I wanted to get that out in case you just want to have general questions, markets, 401k. Is it over? What's Trump going to tweet next? Whatever you want to ask. But also on taxes, because it's April 15th. So let's do a few questions, and then we'll see where it all goes. So first one.
Great.
Todd is on YouTube. Hello, Todd. So Todd asks, should I max out my HSA every year? So it's health savings account, right? So should I max out my HSA? What do you tell Todd?
Yeah. So this year, the number for 2025 is $4,300 that you could put away as a single person. It's $8,600, I think $8,550 as a family.
Okay.
And if you're over 50, you get an extra $1,000. And so that's the max you can put in. The greatest thing about the HSA, for those who don't know, you have to have the type of plan that allows you to do the HSA. But if you do and you're eligible, that money's going to come off the top of your income. So it is an additional tax deduction, which will save you whatever your tax bracket is in taxes. Now, the best part about it is in there, it grows tax-free. It's an account. You can actually invest within there, by the way. And you can use it for other medical expenses. Just Google HSA eligible expenses, and there's a ton of things that you're probably paying for right now with your after-tax money, after you pay taxes out of your
Right.
paycheck. So now you're just transferring it to paying it here with sort of the deductible part. So you're saving the money on items that you might ordinarily buy at the drugstore and whatnot, as well as other medical expenses. But the best part with the HSA, if you can max it out, it's great because this can be rolled over every year indefinitely. It's not the other type of plan where it has to be spent by the end of the year. So if you don't spend it, it stays in there. It continues to grow tax-free, and you can grow it out there to maybe a year where you have a lot of expenses. You can take it out of there, or you can do other things with it down the road. So I do love it if you can do it. You want to, of course, do your 401k. You want to do your HSA, but obviously people only have so much money that they can spare. But the HSA is great for the people that can take advantage of it, and it's certainly worth looking into. And maxing out is always a good thing on all of these plans if you can do it.
There you go. Max it out, Todd. All right. Says Doug. Next, Melissa. Melissa is watching us on Facebook. Hello, Melissa. Melissa asks, how can I manage retirement funds for a small business? So small businesses are interesting, right? Let's get back to taxes for a while in terms of how you file your taxes, for one thing. But then she asks, how can I manage retirement funds if I'm a small business owner? Go ahead.
Right. So when you have a small business, and just so everybody knows, a small business could be a formal small business. It could be a side hustle, anything that has a 1099 that you get side.
This is your side hustle, joining us. But,
Yes.
but it's an interesting side hustle. We don't pay you, so that's a genius on our side.
Darn it, I
And
can't
not,
write anything.
not necessarily for you, but carry on.
Exactly. But if you have a side hustle or any kind of small business that you create income from, now you can do special kinds of retirement plans that you cannot do as a W-2 employee, which most people are. And so there are a whole host of different plans, but it really comes down to how much do you want to put away, for one,
Okay.
and whether or not you have employees. There's certain plans you can do if you don't have employees. There's things like a single 401k if you only have one person, maybe and your spouse. You can't do that with employees. You get a lot of deductions for that. There's simple plans, which is something you should look into. There's also a SEP plan. Some of those you'll have to make contributions for your employees. Now, in a competitive...
What do you guys do, by the way? Because Doug, for people who don't know, you manage essentially what I guess would be described as a small business, right?
Yeah.
In your how many people work for you guys at Flynn's? The name of the firm is Flynn Zito Capital Management out on Long Island, but you guys, you're a financial advisory firm, right? And you have how many employees?
We have about 14 people. And,
okay, yeah, so small business, right?
Yep.
Like this. So this is the types of, when you're giving advice on this, is something you deal with. So how do you guys handle it?
When you get to about this size, maybe a little bigger of a small business, then you might look to do the more formal 401k, because whether you're doing a smaller one that has lesser contributions and you're including your employees if you can, or a 401k, the whole idea of these plans is not only for the business owner to shelter money if they have excess money, put it away for retirement, have it grow tax deferred, but also it's a retention tool for your employees, because competitively, if all things being equal, you don't have a retirement plan and someone down the street does, of course they're going to go there. And so what you want to do is have a retirement plan, and people want to put money away into a retirement plan. So you allow the employee the ability to do that. You just have to figure out which is the right one. So how you manage this is you figure out how much you want to put away, how many employees you have, and what's the best plan for you. Eventually, when you have a number of employees, even a small business, you can do a more formal 401k. That's what we have. We have a match, that kind of a thing. You don't have to get that formal with a smaller amount. Even as a single person, you can do a lot. And so once you get that larger contribution level, you get then just an IRA. They're much higher contribution levels. You give your employees an opportunity to save. Maybe you're throwing a little money in for them to retain them. And then everybody gets to grow that money tax deferred or tax free if they're doing a Roth. So that's how you do it. And there are companies that will absolutely, or an advisor can certainly connect you to the way to set that up in the least expensive way possible, the most cost-effective way for you. Because the 401k has a lot of fees and charges. The simple and the smaller plans do not. They're set up for small businesses to keep the cost to an absolute minimum, to give you that benefit. And there are tax credits when opening a retirement plan. So there's something called the Savers Credit, which as an employer you should look into. If you don't have a plan, you get thousands of dollars for the starting of a plan. So good stuff. Definitely look into it and talk to an advisor or your accountant about how to do that.
It's kind of interesting. I bet that's a way. I don't know any numbers, but just thinking off the top of my head that it's a real issue on a competitive basis, like for small businesses, right? That they people probably love work, like you know, at your firm, for example, people love working for you guys, you and your partner, and they say, "Oh, this is a great place to work." But if you didn't offer that,
Hmm.
maybe they go to one of the bigger firms or bigger places, right?
Yeah,
So it is a real competitive issue that I'm sure a lot of small business owners struggle with because,
they
especially
do.
now, I mean, they're trying to keep their costs at a manageable level.
Yep. And you have to manage it. I mean, and we also, in addition, and some plans have this too. In addition to the match, we also have a profit sharing component because
Mm.
we want to share in that if there is profit, so that people feel it's all of us together doing this, and that's kind of the culture that we're trying to put out there. And hopefully, a lot of firms are like that too. I know certainly small businesses are. Maybe you get it loses a little bit on the bigger scale, but that's some of the advantages. But you need to have that to be competitive. I think when you get a little bit bigger, smaller businesses though, it's a great idea to have a retirement plan. People definitely want it. If you don't have one, you need to look into doing it, not only for you, but for your employees.
One thing I was thinking about with taxes, because we had this discussion earlier about just taxes in general. You remember the first time Trump was president, there was a lot of people making decisions. It seemed to me based on what they thought the future of taxes would be like. They were like, oh,
Yes.
he's gonna cut taxes big time, and he did. He did. He had the huge
Mhm.
tax cut, and then people were saying, "Well, I'm going to wait till then, or I'm going to do this now because of this." I hear less of that now. I mean, it's all about tariffs, which
Interesting.
are taxes. That their taxes are going up. And then the discussion about taxes seems to be not as certain, I guess, or it's kind of or what do you think? Should people make any decisions in their lives, their businesses, based on future tax rates in this
Well,
administration?
I would say there are times when you do want to do that. I've been doing this long enough to have seen, for example, capital gains tax rates go from where they are now, very low, to higher levels, to even ordinary
Yeah,
income rates, where when you have capital gains rates at ordinary income rates, people don't move money around. So there is some planning around that. There's nobody who's saying they're going to raise capital gains rates. But some of the talk at the end of Trump's term, when Biden came in, when these tax cuts that are expiring were to come in, if Trump didn't get reelected, there was talk of
right.
letting them expire, which means that the tax rates were going to go back up. So there was some advance payment. People want to pay at a lower rate, pulling that ahead. Now it's not so much because they're saying Trump's likely to extend these tax rates. And if we have the same rates, I don't need to do anything major different. But the big problem with doing tax deductible 401ks and other IRAs now is that down the road, if we don't get this under control and we have, a lot of debt and deficit, and we have to pay it down, tax rates are going to have to be higher. And you could be deferring your money to a point in time when you take it out later where
No
tax
matter
rates
who's
are
president.
higher,
Yeah.
no matter who it is. So,
Yeah.
so a little bit of that, and that's why the Roth comes in. If you can pay at a lower rates, pay the taxes now and put it away, and then comes out tax free no matter what it is. So those are the things you want to think about. So perhaps again, if these get extended, whenever the end date of that is, there's talk of making them permanent. I don't know what that means, but what's permanent if they're going to
Nothing
change it again?
permanent in life. Yeah.
Yeah, exactly. So, but yes, I do see people doing things around. I had one case in particular where I had a successful company that had a very large capital gain. This was
Yeah.
way back when capital gains tax rates were high. They just waited it out and they didn't sell it. And then the minute capital gains rates went to 20%, they said, you know what? I'm going to sell the business, realized the gain, paid less, but the government got 100% of that 20%, where before they were getting 0% of 40%. So
Right.
that's the point. Sometimes when tax rates go down, money moves and they get more, even at a lower rate. That's why the revenues go up sometimes.
So one more thing on that, because it brings back to Melissa was talking about how you manage retirement funds for small business owners, but that's on kind of the talk we're having about what's going to happen to tax rates. There was something the other day that came up about whether the top federal rate would be extended, like everything else could be extended as the tax cut, and it may not be. That Trump might be open to
Mhm.
that, right? And I was thinking actually of small business owners when they were talking about that, because
Mhm.
and that's why I brought this up. So maybe you could talk a little bit about this,
Yeah,
about how you should file as a small business owner for your
right.
taxes, because don't a lot of small business owners, people say, oh, those are rich people, which is a different discussion. But like
True.
a lot of times it could be a small business owner
Yeah.
that's filing as an individual and pays
Yes.
that top rate, right? So that could be a big story for them.
Yeah, most companies are set up, small businesses are set up as LLCs with an S corp election. And
Right.
the S corp election just means that is going to flow through to your personal return. So yes, there's all these small businesses, but they're paying it in ordinary income tax, individual tax rates. There's a C corp which has separate corporate tax rates, but most people don't do that unless you're a very, very large corporation. So it is that a lot of these small businesses are paying like an ordinary income tax earner, and so that's the problem, is that even if their wages are high or their income is high, they could be paying at these higher rates if at the high end those tax rates go up from 37 back to 39.6 or whatever they were before. And so I think Trump is scaring the people in that bracket to say, hey, listen, it's not off the table. And I think now we get all freaked out if you're in that bracket. And then when he says, I'm going to leave it alone, you're like, oh, thank God. I'm thankful for you doing nothing.
You've seen this movie. You've seen this guy on a operating before, right?
I'm thinking that's how it's
just interesting, but like sometimes it's like, there's a lot of political will to be like, oh, he's not helping the quote unquote rich, but a lot, could be a lot of his voters out there that are small business owners that are in that bracket. So I think it's an interesting story, something we should watch. By the way, you probably thought like 5 minutes ago I was not paying attention to you, but the reason I was looking at my phone is because my wife wanted to know if we should order Japanese food. So I said yes. So I had to answer that. I thought that was a vital question because I was like, I don't answer
this. Time sensitive. It needs to be delivered on time.
Right. I was like, whatever. I'm not gonna be able to do it. So anyway, we're gonna try to do these Q&As from time to time with Doug and other people, and maybe we'll do some stock picks next time. We'll see how it goes. And but we thank you for joining us tonight. Remember, I'm on News Nation on television. People still watch television from 3 to 6 p.m. every day in the afternoon with News Nation Now. And Doug's on 2 or 3 times a week, usually 3 times a week, talking about the markets and investing and everything. So thanks a lot, my friend. Flynn, Zito Capital Management, the great Doug Flynn. I'm Connell McShane. Thanks for watching us tonight, and we'll see you on TV tomorrow.